Good morning, everybody. It's Chris from Serene Education with the 4 majors and us update for the 12th of July 2013. Hi, guys. We're going to be looking at the 4 majors end of week using our FX Ultimate 8 templates on the 4 majors, starting with the Euro against US dollar on the daily. So, what did we have yesterday? Well, clearly, after all that bullish sentiment after Bernanke's comments the other night, we haven't really seen much. In fact, we've actually, as I mentioned, we've traded. With that bullish move, we traded back into this consolidative range between the 38.2 monthly and the 38.2 weekly. And in this area, we've got all the moving averages together, and you can see quite clearly what's happened over the months in this area. A lot of indecision. This area in particular, 13,300, above this area is the major support and resistance level here. This blue line constitutes to that, goes back to around about 2010. So we are trading within this consolidation range again, and you can see yesterday's candle, a lot of movement throughout the day, but no clear direction. It's closing at the top end of the candle, so more favoring the upside. However, on the Asian session, we are seeing a slight pullback. That pullback still happening above the 38.2 on our daily fib. Okay, so that's important. As long as we can maintain above ultimately the 38.2 on our monthly, then we should still looking for the upside. If it can maintain the higher range of this move, the better. So you can see our Euro US dollar trading the sentiment candle indicator box here, not really giving us any true direction. Okay, very speckled. And when you have a speckled graph like this, then there's no clear confirmation of where price wants to go. And you can clearly see why we are not getting any price action, because we are trading within this consolidated range. So want to get above it, ideally above the 38.2 weekly, the red line, which will also be on our 4 above the institution, which is a good sign, but also to maintain above the 38.2 on our monthly. Very important. If it maintains above the monthly fib, then there's more buying or more positive sentiment for this particular pair. However, you can see a near-term resistance price, even after all that news that we saw, that all the positive outcome we had the other day, clearly did not get above the 38.2. We had a reattempt a couple hours ago, yesterday, and failed to get above this area. So this becomes a major support and resistance level, and this becomes a major support and resistance level. So clearly trading within this consolidated range, and while it's doing that, there's no true direction. The one thing we do have is that it's trading above this, so ideally we should be looking for buying opportunities, break higher. If not, what I've done is I've put a trend on alert above and below these 2 particular points and left it at that. I want a nice clear break on the 4 hour below or above that to confirm where I need to be looking at for the foreseeable future. On to sterling. Here again, also a massive bounce, but a massive bounce on a very major support and resistance level that goes back to 2010 as well. And the price that after Bernanke's comments the other night saw price building on that major support. We hadn't been down here for a very long time, and once we had, this is clear objective was if we broke through this is going to be very negative indeed for the foreseeable future. And with Bernanke's comments coming out the other night, it was not great for the US and very strong for any cross pairs, and that was the outcome. However, price rallied into the weekly fib here at 23.6, and she's come unstuck. She's stalled. Yesterday we had a lot of price action, whipping to and fro. However, price still not managing to close above that area, and it's imperative that we get above this as soon as possible if this is genuine to be a bullish start to what happened last time when we saw here was a bounce to the upside. Ideally, if we can get above the 38.2 on our weekly as soon as possible, then get above the 23.6. If we get above the 23.6 here on the monthly fib, then it's clear sailing up towards the institution and also towards those major highs that we've seen recently over the past couple of months. So very important. First call is to get above this 23.6 intraday. So if we go to our 4 hour time frame, you can quite clearly see hesitation. We had a reattempt end of play yesterday. However, you can see price not really getting above it. Very indecisive, the candle wicks at the moment. You can see that the long-term sentiment for sterling is one of negativity, and the intraday sentiment is negative. The R squared is not really complementing this, and we are seeing consolidation. Price is not really moving higher or lower. In fact, our intraday, we're getting the institution moving average being below price, but the RMO not really moving with it. So very important we get some sort of indication. And if it is to be positive here, we do need to see a bullish engulfing candle close above on the 4 hour above this 23.6, and then we could target to that 23.6 on the 4 hour, which would be back towards the institution. Ideally, that's the one we want to be above. We can get above that as soon as possible, then we can start looking at long-term sentiment for sterling against US dollar. You can see the long-term outlook for this particular pair. Swing lows, swing lows, swing lows. We have had a breach of that trend recently. Okay. However, we're still trading below the major institutional moving average one and the major fib line, or the major support and resistance level here at 15,300 mark. So imperative we get above that as soon as possible. This is to be genuine buying sentiment. US dollar Swiss franc. Here again, we had a huge move over the past month or so, and what happened was we were heading into this the monthly fibs here at the 23.6, and at this level we had some price action not so long ago. We saw an attempt of the US dollar to try and rally above it and close, however not really having any sentiment once it had done so in order to carry it through. And sure enough, heading into it quite bullish, and then Bernanke opened his trap. And what happened? We had this massive fall to the downside occurring in and around this area. I was not interested in taking any trades here. A lot of our students were saying they should have been looking long. I wasn't really prepared to do so because we've been in this position before. I wanted to see a clear breakout, a pullback of some sort, and then a genuine confirmation continuation candle to the upside. We had breakout, the pullback, but no continuation or movement to the upside with price breakout. So there was no genuine sentiment behind that move, and reason why what happened was we saw price moving to the downside. I'm not saying it was likely to occur, but the probability is always likely because this is a major support and resistance level, and that was exactly what happened here. So broke out, and we had this major pullback. So I took this is our monthly fib and our weekly fib in red, and then what I did was I took the all-time low here to the current high on this move to the upside, and you can see my 23.6 to 38 is where price is trading between. So now, if anything, want to see the 50% retracement here on my daily to be breached or closed below. You can see the last day was indecisive. Yesterday, very indecisive range. My 20 and 50 period moving average are pretty much above price acting as resistance at the moment. Now you can see that, like the euro counterpart, very speckled, no true direction at the moment. Now RMO is above, MACD has just gone below, but this candle has not closed yet. So as it stands at the moment now, if you go to the 4-hour time frame, she's negative, and you can see the institution on 4 hours actually acted as support. Before she was resistance. Now we've seen the breakup, the continuation, then the pullback. So now if this is to be negative, if the US dollar to really be negative, we want to see the institution being broken. So we need a nice 4-hour candle break below not only the institution but also the 50% on our daily. And then we could target near term the 61.8 and ultimately back towards the weekly fib over here, which is not only the, if I can just get this out so I can see it, what are we looking at there? That will also be the 78.6 fib on our daily, but also the long-term weekly fib retracement here, just above the 92.46 mark. So all the other opportunities, I've done exactly the same here. Put a trigger alert below the institution and also above, because if it breaks and closes high on either side, then I want to see, I might be able to look at it. So you can see quite clearly here, the sentiment has been one of upside, swing high, swing high, swing high, swing high, breach. So now this upside has been broken, but we're still above the institution, so it's still positive, consolidated. This is to be long-term positive for the US dollar Swiss franc. We need to be trading above this 22.6. So at the moment now looking negative at the moment, but ideally want to see a break of this 50% retracement on the daily. Want to see a break below the institution on our 4-hour, and then we should be targeting back towards our weekly fib down the bottom here. On to the last pair of the day, the US dollar Japanese yen. Here again also what we saw with price recently getting above the 50% monthly fib retracement here, after a nice bounce on the 38.2 recently through mid-June. However, with Bernanke's comments the other night, we saw price falling back below, and yesterday a very indecisive trading day. A lot of range, but very indecisive. No true sentiment as to where they want to be going below this. But ideally, the longer maintains below 50%, the more likely is we should be targeting back towards our 23.6, which is our weekly fib retracement area, where we can see in the past we've had a lot of consolidation. We get below that, then we're targeting back towards our monthly 38.2, which will bring us back towards our institution moving average on our daily. As it stands now, we are in a consolidation range with negativity more in play, more in favor, put it that way. You can see the intraday sentiment looking very negative indeed. The R squared only on our 30 and hourly, not complementing that true sentiment. However, you can see that the sentiment is still wavers the downside. So our 4-hour chart, if we go in, you can see the institution is the one that's stopping price at the moment from falling any further. But you can see that the red arrow, red candles, the intraday sentiment on all our indicators looking negative at the moment now. RMO is just below the 0 line and our MACD is clearly below, however consolidative as we've been going sideways. What we want to see though is ideally a bearish engulfing close on our 4-hour time frame below this institution moving average. We have another 83 odd pips, 83 minutes, so an hour and 20 minutes still to go before we see a 4-hour candle close. If it is, because you can see the last couple of hours, the last 20 hours in particular, has been indecisive because we've got a lot of spinning tops. We want to see a decision candle or bearish engulfing candle in this case to take us below the institution. Then we'll target the 97.114 mark. Other one would be a bullish engulfing candle close above the 50% fib retracement. Then we should be targeting back up to the prior highs we saw recently in around the 101.46.6 mark. Okay, so keeping it simple, waiting for price to give me direction. Once I've got the direction, trade in the direction of the overall trend, and you can see at the moment now looking negative, swing low, swing low. So ideally we want to see negativity coming into play if that is genuine negative for the US market, what Bernanke mentioned the other night. If not, we could see a consolidation. The more she consolidates here, the more likely price is going to build on that. So be patient. A lot of indecision candles. We don't trade indecision, we trade decisiveness. Wait for the decision candle and then we trade the outcome. Okay, so that's it, short and sweet. End of week, so you could see a lot of consolidation later this afternoon. Just want to have a look and see if there's any news out today. We got some negative news for the Australian market early this morning at 2:30 a.m. GMT, with the home loan month-to-month figures coming out way lower than the forecast. They were expecting a positive figure. The previous figure was 1.2%. They were expecting a positive figure of 2.3%. It came out higher than the previous figure, but lower than the forecast. So 1.8 came out, so still positive, but not as great as they thought. So a bit tentative there, sitting on the wall. The next one this morning is going to be the 10:30 a.m. GMT Euro industrial production month-to-month figures. Here again, they're expecting a contraction, and that's likely, nothing really happening out there in Europe at the moment now. So we are the previous figure was 0.14%. They're expecting a negative 0. So not looking really favorable for the industrial side. We'll see how that turns out. But then this afternoon we've got a lot on the US. We have the PPR month-to-month figures, core PPR month-to-month figures. This is inflation. We have the consumer sentiment, and then at 6 p.m. GMT this evening we have the FOMC members Bullard speaking. So in the day off we have some members of the FOMC speaking, so we could see a bit of movement. However, I presume by then we might see people starting to consolidate their profits if they've been in any trades this week. So we could see price just being kind of stagnant from this afternoon onwards. Other than that, please back up this particular strategy with sound money management rules. Keep it simple. Don't overcomplicate things. Support and resistance, major support and resistance levels are paramount. Need to know the long-term setups of what's happening, and then use that to actually gauge what's likely to occur intraday. Very, very simple. Work from the bigger time frames, working intraday. That allows you to see the bigger picture, allows you to see where the volume is, allows you to see where the sentiment is, and if you know where that is, then you're more likely to become more profitable as time goes on. Okay, so I'm going to leave you to it. Have a fantastic weekend with family and friends, and I'll catch you first thing on Monday morning. Until then, you guys trade serenely.